Hope you can see me, whether you're joining us here live in the room or whether you're watching this on the live stream onto YouTube. And we're just setting ourselves up, and we'll be looking to join or looking to start it just in a moment or two's time. Just bear with us, and we'll look forward to speaking to you in a moment. Thanks for that, Peter. Yeah, it's all change here, ladies and gentlemen. So we're just getting ourselves set up and ready to begin. So good afternoon, ladies and gentlemen, and here we are to what is a kind of a new element of the Trading Spotlight webinar, where we're going to actually talk about some particular hot topics that will be the predominant theme for our Wednesday sessions going forward. Those of you joining us for the first time, it's great to sort of to see you here. Normally, I would be doing the Monday session, but now I'll be doing kind of a mixture of Wednesday and Friday sessions with my colleague Jens. As I said, it's great to have you here. And what we're going to talk about today is really what's in store for emerging markets in 2021. It is quite a hot topic, quite a fascinating topic, and one that we'll talk about today, and also undoubtedly sort of revisit on several occasions throughout this trading year. So, as I said, great to have you here. It'd be fantastic to know, what, if any, experience you have for either trading or investing in emerging markets. Maybe you're joining us from a country that is deemed to be an emerging market, in which case it's fantastic to have you here with you. Maybe you're already an experienced trader and investor, and actually you like to particularly look at it. Fantastic if you have, and if you've got any particular thoughts or ideas, then please join us, and that will be give us your own particular thoughts and considerations. That always works an absolute treat for us, and actually just it's fascinating to get sort of to get other people's interactions and considerations. So shall we have a look at let's have a look at some screen, shall we? And we'll bring it up here to begin the presentation. So as I said, I'm hoping that you can all hear me. I hope you can see me. Hope you can sort of see the slides as well. If you can, that's great. Just let us know. Just make sure that we're doing the right thing. The tech is working for us. We're always keen to do that. But as I said, we're going to look at how will emerging markets change in 2021. In particular, we're going to be interested in how they may fare. Okay, so as always, I appreciate we have a wide range of experience here of people joining us in the room. Invariably, we have people who are complete beginners to people who have been trading and engaging for maybe up to 2 decades. So we're always interested to sort of try and cover as much as we can, be able to sort of give everybody a little bit of insight, a little bit of education, a little bit of enrollment in terms of understanding the topic and how it could actually become part of your day-to-day sort of trading plan. But here with Admiral Markets, what we'll find is that as it says there, we have global presence with support in local languages, and you'll find Admiral Markets are licensed and regulated across a wide range of regulatory environments. providing very competitive spreads on the most popular trading products and allowing you to engage with markets using both MT4 and MT5 and also the Admiral Markets Supreme Edition. If you have any questions about Admiral Markets, please get in touch with your account representative and they'll be very happy to help and guide you. So what are we talking about in terms of our agenda for today? Well, as I said, I appreciate we always have a bit of a wide range of people joining us. And it's a case of appreciate some people might not even know what an emerging market is. They might not even really truly understand them and might not actually be aware of how they differ from the existing markets that they look to trade. I'll show you where you can sort of find one or two of the charts that cover emerging markets and how you can actually utilize them, or to give you that kind of big picture. We'll also talk a little bit about the relationship between emerging markets and the US dollar. Yeah, you might be aware of that, or as I said, you might be completely new and it might be sort of a new insight to you. And we'll also talk a little bit as we go through about how you can take advantage of the present situation that we find ourselves in. For those of you who don't know me, my name's Paul. I've traded for many years. Primarily, I sort of look to focus on FX indices and commodities. And my own particular trading style is to sort of be trend trader for sort of longer term trading, and then sort of reversals and mean reversion for shorter term intraday trading. So let's talk about how will emerging markets change in 2021. I'm sure you're all aware of it. Wherever you're joining us from, or whenever you're joining us from, is that the COVID pandemic of 2020 has created many shifts in the global economy. Among these, the weakening of the US dollar has led to a rise in emerging markets, and we should take a look at them and determine whether they are viable for the kind of retail trader and investor. And so what we're going to see and discuss is not only about emerging markets, but how they link to the US dollar, and actually how we can actually look at sort of playing them, turning them into an opportunity, utilizing the instruments that you have available to you on the Admiral Markets trading platforms. So, it is clear that, basically, that COVID pandemic, which we're still living through, and we here at Admiral Markets hope that, wherever you are in the world, you're joining us. We hope that you and your families are safe and well, and that you're actually sort of, really appreciate that you joining us here for these sessions, whilst we're all in that kind of a lockdown environment. So, we've had, as I said, the COVID pandemic, but also elements within the stock markets and also elements within the US that have all had a contributory effect. And what we've seen over the last couple of months is how that's played out. And we're going to discuss how that'll look going forward. So, in terms of, where should we start? What should we actually sort of, focus on in terms of, where we can begin? Well, it's fair to say that the US election of November 2020 was one of the many elements that are causing a shift in global markets. And for those of you who've joined us regularly for a Trading Spotlight webinar, you'll find that we did a couple of sessions on that, not only at the time of the election, but also just a few weeks ago at the sort of start of 2021. And if you want to watch those to get more in-depth insight, then you'll find them. You'll have access to them all on the Admiral Markets YouTube channel, where you'll find not only those, but actually also a whole wide range of fascinating topics that you can delve into to help you pass through these particular lockdowns. But with regards to this particular session on emerging markets, that US election, it was actually a hugely contributory effort, in terms of causing shifts in global markets. One of the elements is that the previous president, Mr. Trump, he was always very clearly following an America First policy. He was always putting an America First policy, which had been in its own way different than the sort of preceding presidentials and administrations and foreign policy that had been run. And what that had as an impact on both in the US, but also, just across the globe, was that this effectively hoovered up foreign investment from around the world. And it's kind of an interesting thing to consider and to think about, is that effectively as that kind of foreign investment, people around the world, whether they be fund managers, traders, etc., looking to effectively to sort of put it into the movement of where their investment well, then invariably what you'd be able to do is to, when people are sat around the world, whether they be fund managers in Buenos Aires or Jakarta or Johannesburg, looking to try and actually consider where they would effectively put their capital. Well, invariably what they're looking for is that America First policy from Mr. Trump just basically became enormously attractive. Okay, if you're in one of those places and there's a little bit of too much risk, well, where do you stick your money? You stick your money in the US, and in particular, what we saw was the kind of that money going into sort of US tech stocks, and so we saw a great sort of shift of capital, and it flowed out of the rest of the world, and particularly out of emerging markets and into the US, and in particular US tech stocks. And once again, we delivered a session on that a while back as well. However, the election of Mr. Biden has signaled a shift, okay, and it's a shift back towards the rest of the world, in the sense that Mr. Biden is not really looking to put America first, in the same sense that Mr. Trump did. Undoubtedly, he will have a sort of domestic considerations to take on board, but the reality is that is effectively will play sort of second fiddle compared to what will happen and engage with the rest of the world, and we'll touch on that in a moment or two in terms of the kind of the overall global shifts that we see occurring. But that election of Mr. Biden, as we'll look at the charts a little bit later, has already started to benefit emerging market economies, or EMEs, as you might see me refer to them for the rest of this particular session. So, I recognize that, as I said, there are people here who are completely new, completely sort of new to trading, and might not even really fully understand what emerging markets are. And it quite often is loosely defined, and we'll talk about that in the next slide. All right, but what we're really looking for is, we're looking at particular economies around the world that are defined as a low to middle per capita income. Okay, so generally what we've seen is kind of poorer nations around the world. However, they mimic a developed nation, but does not fully meet the requirements. And this is the kind of element that is of interest, is that those economies, okay, as they're growing, developing, they're usually transitioning from what's called a closed market system to an open market system. So an open market system is effectively, it is open to foreign direct investment from around the world. And invariably you will find that there are those fund managers, okay, there are banks, there are institutions, there are individuals who, in an effort to sort of achieve greater return for themselves, will happily sort of take on the sort of the increased risk of investing in a growing and emerging economy. So, it means that it does carry more risk for investors, but equally what you're looking for, or on the other side of it, is that the likelihood is that there will be greater rewards. And what comes from that is that very often those kind of emerging markets are usually considered to be the faster growing economies, okay, because they're like teenagers, okay, they're going through growth spurts, okay, but that means sometimes it can be a bit bumpy, sometimes it can be a little bit challenging, a little bit volatile, but generally the overall trend tends to be to be in growth spurts and to be growing in the right sort of trajectory. And in the same way, the teenagers and economies, that's what we're actually looking to see, for in terms of for traders and investors to be able to sort of invest into those emerging markets. So, why are they important? Okay, why are they of interest to us? Well, as we just said, these are, they're rapidly developing countries, and what is kind of interesting for us, okay, is to understand is that more than half of global economic growth comes from emerging market economies, okay? You have to remember that, you have to take that on board, okay? More than half of global economic growth is coming from those, and I believe that actually that will increase, okay? That will increase over the period of Mr. Biden's presidency, and perhaps maybe as a longer term trend for 5 to 10, 20 years. So, in the past, okay, over the last 5-10 years, you would hear people talk about the BRIC, okay, mainly Brazil, Russia, India, and China, and they were very popular kind of emerging markets. And as I said on the slide before, this is where sometimes people's definitions of it can be a little bit loose. Certainly China is seen as the sort of kind of second largest economy in the world. It looks like that it's likely to overtake the US economy at the present moment, based upon what we've seen over the last year, and that's now looking to happen in like 2028. So in many ways it's called an emerging market, but it is global, and it will be a hugely global market. Part of the reason it's maybe considered as still as an emerging market is because in many ways it's still a closed market system. In terms of, for let's say, for the West or foreign countries in particular, the opportunity to sort of invest in that in a truly open market system is still not there. Okay, and it might be deemed that investors in China, would believe it to be rather opaque, an opaque market at the moment. So perhaps that's just why there's perhaps some sort of kind of a little bit of reticence, okay, about really truly considering it as a totally developed economy, because it is still effectively a kind of a closed market system rather than an open market system. But certainly in terms of like Brazil, Russia, and India, they have gone through, in particular Brazil, they've gone through great steps over the last 10 years to effectively convert themselves into truly open market economies in order to effectively sort of, secure that foreign direct investment. You'll also see other countries are considered as emerging markets or of interest. So countries like Mexico, Indonesia, South Korea, Turkey, Colombia, Vietnam, Egypt, and South Africa are also considered. And actually, there could be an awful lot more than that. Okay, there is actually that number, that kind of list. It changes. Okay, as we see, as we see countries have those growth spurts. Okay, as their economies become open market economies, and invariably they add to the list, or they actually sort of graduate towards being, sort of what we would consider to be developed markets. So, as I said, for those of you completely new, that might just give you just a little bit of hint of what people are talking about when they're discussing emerging markets, and why they're important and why they're of interest to us. But what we want to be able to do is to have a look at what actually goes on there. How do we actually represent the kind of the sort of the price movements, okay, the understanding of what the actual trend and what the sentiment is within those emerging markets, and you'll be able to find that there's quite a few ways to sort of achieve that. But one of the sort of the easiest ways to sort of understand the kind of emerging market economies as a whole is to use ETFs, okay, exchange traded funds. If you're not entirely sure what those are, my colleagues Marcus and Jens did some great presentations there earlier in the Trading Spotlight webinar series, and you'll be able to sort of find them on the Trading Spotlight YouTube channel. But in particular, what we, one of the things that I look at and use myself is an ETF called EEM. All right, just you can make a note of that, so you can actually search for that, and that's provided by iShares, and that is an exchange traded fund that effectively just sort of deals with emerging markets. So it's almost like a one-stop shop where you could actually go to either sort of whether it be invest if that's your particular style, or to be able to just keep an eye on sort of an understanding of what is actually going on within that kind of entire emerging markets economy. Okay. And what we have here is, I've put up this is a weekly chart here, okay, of EEM, okay. So which you should be able to find on most platforms these days if you want to take a look. As I said, this is a weekly chart, and let's have a little look at it. A little bit of interesting. Let's just bring up the hopefully just bring up the sort of drawing tool here for us, okay. So as I said, this is a weekly chart, and for the last few years, okay, the sort of emerging markets, okay, had been in kind of a little bit of a sort of a little bit of a range, okay. So for a few years they've been in a range, and remember this comes back to effectively what we're looking at as with Mr. Trump's presidency. It was very much in America first. So and there's other elements we'll discuss in a moment, but with that kind of America first sentiment, investors' money wasn't really excited about emerging market economies, because the return that you could generate from being in the US, and in particular US stocks, just made investors think, well, why would I take on the additional risk of emerging markets when in fact I can get great returns in the US, and also my funds would be safer. But things change. The world is constantly changing. There is always shifts, okay, in policies, driven by either politics, or by sentiment, or just by changing economic trends. And what we saw here on the EM chart was, yes, we had a little bit of a push to a high. Just this would have been sort of kind of end of 2019, start of 2020, before we had our particular COVID crash, okay, which was experienced through pretty much all economies, okay. Even though this is a representative of a basket of emerging market economies, it really, all charts looked pretty dire at that particular time, okay, regardless of whether it was an emerging market, whether it was a frontier, or whether it was a developed economy. And you can see there, even from the volumes there, that, we're seeing huge amounts of selling. But pretty much like, most of the developed markets, okay, we saw a turnaround there, okay, in March into April, and actually we saw price moving, very nicely, slowly but surely, working its way back to its recent earlier 2020 highs. Part of that was effectively, just a consideration that maybe at that particular time that we were effectively looking at getting a view out over of the COVID, okay, that we're actually coming to terms with it and managing to work with it. There was also, as we'll look at in a moment, there was influence from the US dollar, and there was also the case of us moving towards those US elections, okay, and the kind of impact that would have, and a gradual understanding that the view was that Mr. Biden was likely to win, and we also saw Asia in itself, which makes up a great deal of emerging markets in this particular ETF. What we saw was effectively that they went through the COVID earlier than ourselves here in the West, and actually we're recovering out of it much faster because of their earlier entry to it. But interestingly, what we had here, this was kind of sort of, the start of November there. We can see this kind of big bullish candle here. And actually what we saw was, as we got an indication of Mr. Biden winning the US election, well, that effectively just confirmed what people had thought was going to happen, namely that we'd see the end of that kind of Mr. Trump US, America first policy. And actually we would probably return to more like what we saw in the Obama administration, whereby the rest of the world would be, would effectively be able to sort of, operate how they pleased, and there would be effectively a move of capital to those kind of emerging market economies. And you can see for yourself there, okay, just actually looking from that kind of, there's a price point there of around about 47. We rallied up quite nicely up until about 56, 57. Up until last week, actually, up until we saw the inauguration of Mr. Biden, and actually what we've seen there is, you can hopefully maybe see that what we saw there was a kind of a bearish engulfing candle on a weekly chart. Doesn't happen a great deal, okay, but it's something to take a note of, and we have to sort of take an understanding as, now that Mr. Biden is into the White House, are basically, is everybody just going to take a breather to see what kind of policies he actually comes out with, in terms of, what regarding the policies he promised on the election trail compared to actually what he delivers once he's, firmly ensconced in the Oval Office itself. But, as I said, this EEM chart is always a great one to give you a good insight, okay, into what the sentiment and what the trend is for, for the emerging market sector. And you can see for yourself there, it's been on a cracking trend, almost, as you say, almost like nearly a year-long trend, okay. You're into February 2021, and really from sort of March, okay, last year where we turned around, it's been, quite significant. There's clearly strength, okay. There's clearly money flowing into emerging market economies. So, I alluded to it a little bit earlier. We start to have try and understand, well, why is the US dollar important for the emerging markets? What actual difference does it make? How does it have any kind of influence? Well, I just ask you to remember, traders, is that to remember, the US dollar is still the reserve currency of the world, based on the largest economy in the world, the United States. Even with China likely to overtake the US in 2028, it's unlikely that the US dollar is going to be replaced as a world reserve currency. Certainly not in the next 10 years, okay? Maybe 20, 30, 50, that will happen. But, really that's a kind of a bigger trend, much more outside of the remit of this particular session. In terms of what we'll see certainly for the next 10 years is that the US dollar will certainly still remain the reserve currency of the world. That becomes important, okay? And there's other elements that it factors into. what you have to remember is that commodities are still primarily priced in US dollar, and that's for both, soft commodities like agricultural commodities like coffee, cocoa, soybeans, etc., and also hard commodities. All right, hard commodities, effectively getting that name because you have to dig them out of the ground, whether that be copper, silver, gold, platinum, palladium, etc. They are still priced in US dollars. Okay, so remember, some of these emerging market economies, one of the reasons that they are growing growth spread is that they may well be exporting a good deal of their excess commodities. Maybe like Brazil, they actually they basically mostly export most of the oil that they effectively do, because up until recently, their economy actually used ethanol more so than petrol and gasoline for its vehicles, and so they would effectively export, primarily most of their the oil that they would pull out of the seabeds just off the Brazilian coastline. So when you're trading in those commodities, whether it be soft, whether it be hard, effectively companies, individuals, companies, countries, blocks, they need a float of US dollars, in order to be able to facilitate that kind of commodity trading with purchases and other global trades. So invariably, the US dollar has, it is important to these emerging markets, especially if they are, an exporting economy, and especially if that is effectively most of those exports are commodities of one sort or another. You also have to just remember, just as an aside, is that in the FX world, foreign exchange world, over 50% of FX trades involve the US dollar in one form or another. So you just have to recognize, the US dollar is the grease, that sort of oils the wheels of international trade. One of the other interesting things, and one thing that becomes important is that also is debt. Debt is also very often priced in US dollar for emerging market economies. Why would that be? Well, invariably, that's just investors wanting to mitigate their risk. If they're going to invest, or they're going to loan money to a country, that will be invested in US dollars, because invariably they think that that's likely to have that. The US dollar is stable; it's the reserve currency of the world. The investors may not particularly want to hold too much of the emerging market economies' currency, because as we said, those economies might be volatile. They might be going through growing pains. That sort of that emerging market countries' currency may actually be supremely volatile, or may actually effectively change in price massively so. And so actually, in order for investors to mitigate their risk, they will invariably have the debt, the money they loan, priced in US dollars. So if the US dollar is very strong, although that effectively means that emerging market economies, the debts they have to pay back, if they're priced in dollars, it's going to cost them more of their own particular, capital that they would normally use for their internal domestic plans, will actually be used to effectively to service their US dollar debt. And that is actually a huge thing. That can be a huge thing depending upon the country. If you look at countries like Argentina, who have had issues over the last 10-20 years in terms of their economy, in terms of their currency, the price of the US dollar against, in that particular case, the Argentinian peso, can have a huge impact. So, when you're looking at emerging markets, when you're looking at emerging market economies, and looking at emerging market currencies, it's important for you also to have a grasp on what's going on with the US dollar. That is key, because it does have, hopefully, as you can see, that has huge influence on those markets. And so this particular case, this is a chart of the US dollar index. Remember the US dollar index. This is a weekly chart. US dollar index is effectively it's the US dollar against a basket of currencies. Now, admittedly, most of that basket are what we would probably call tier one developed countries, economies, currencies. So I think it's about 57% of it is made up of the euro. Then you'll have sterling, you'll have Japanese yen, you'll have Swiss franc. You'll have Swedish krona, Norwegian krona, etc. So they are major sort of currencies. However, what it does do is it gives us an indication of the strength and the weakness of the US dollar. And of course, that strength and weakness has a huge impact, on emerging market economies for various reasons. So let's bring up the old drawing tool here. What we can see here is very often people are using a datum point of around about 100, okay, on the dollar index, okay, just using that as a simple datum point. As I said, this is a weekly chart, and we can actually see, sort of back in 2017. We had, the sort of US dollar was very, very very strong. It was up trading around about 103, 104. And Mr. Trump had always sort of said that he wanted the dollar to weaken. Now, in his views for reasons for wanting to weaken the dollar were not to help out emerging market economies. Okay, what he wanted was a weak dollar so that American exports would become cheaper. So he was hoping people would buy more kind of US goods, services, etc. And what we actually saw was the US dollar itself sort of dropped down until about 2018, down to around about the kind of 89, 90, 89 point. But then what we saw was effectively we saw a drift back up here. Okay, we drift back up with dollar strength. And actually, during the COVID crisis, okay, what we saw was we saw real swings there from as low at 95 back up to 103. Okay, so remember what we're saying is that effectively is that when we had that kind of crisis, capital is a coward. It will run and hide in the safest place at the first sign of trouble. And people have thought that that US was the safest part, okay, and in particular those US tech stocks. So invariably what we saw was money around the world just literally jumping into the US, okay, either to sort of buy treasury bonds or to buy dollars in order to sort of trade on US stock exchange, which basically meant effectively buying those US tech stocks. But whilst that happened, invariably that's not what certainly not Mr. Trump or the Americans wanted, and actually not really what the world wanted either. And what we've seen since that time is, as I can see, is the dollar, okay, the dollar has weakened, okay, generally, okay, at over the last sort of 9-10 months, okay, from highs up there around about 100, whereas actually down to around about 89, 90, where we're trading as we speak. And you can perhaps see there on the weekly chart, it's coming off those lows at 90, where we were just a couple of years ago. But invariably, what we're seeing is that we've had a kind of that a weaker dollar. Remember, a weaker dollar is in many ways better for emerging market economies. Okay, in many instances, and also that has a knock-on impact in terms of keeping the US economy afloat in terms of people wanting to buy elements, stuff from the US, and we'll look at that in a particular moment. So, as I said, if you're looking at emerging market economies, it's good to have a look at it reference and relative to the US dollar, because it has such a huge impact on it. And we can see that, okay, in terms of a chart, which I've shown quite a few times, and this is a monthly chart here of the US dollar against the Chinese yuan. This is the offshore traded yuan here. This is the monthly chart, as I said. So effectively, what we can see here is, we talked about how China is still seen as an emerging market because it's still effectively, in many instances, a closed market system as opposed to truly open market system like we would have here in the West. But you can see for yourself here. Let's just draw some tool here. Is that what we saw was after the kind of the American dollar sort of strengthening up above 7 there, okay, at the sort of into 2018, 2019, start of 2020. What we saw here was, you can see for yourself here, the US dollar really kind of weakening against the Chinese yuan. All right, so, the Chinese yuan strengthening definitely against the US dollar. That has knock-on impacts, doesn't it? If that means effectively, that does mean that the sort of US dollar has weakened, which means their exports are cheaper. It also means that the Chinese yuan is strengthened, well, invariably, against the US dollar. And if we know that US dollar is what's used to sort of pay for commodities, that allows China to effectively have a little bit more leverage, throw a little bit more weight around in terms of their negotiations buying of commodities, and that is a thing that we have seen. And as I said, remember, there's commodities are also closely linked to quite a lot of those emerging market economies, not all of them, but quite a few of them who are, let's call them commodity rich, okay, whether that be softs or hard commodities, and that has actually helps and enables them, and I think it's a trend that we will continue to see certainly throughout this year over and maybe over a longer period. And one of the ways we can look at that, okay, and take an interest in that using the kind of Admiral Markets MetaTrader 4 and MetaTrader 5. This is here we go. This is the Hang Seng. Just bringing up my drawing tools as always. This is the Hang Seng, okay, the HSI 50. You'll find it under the Admiral Markets MT4 and MT5. Hang Seng, it's the Hong Kong Stock Exchange, okay, Hong Kong Stock Exchange. Now, there has been, certainly, let's say, interesting stories coming out of Hong Kong over the last about 18 months or so. But what we're really looking at is we're just looking at the stock exchange as a reflection, okay, of where the strength and weakness may be. And this is the daily chart. And whilst we've had a little bit of a range, a little bit of movement there beforehand. What we're kind of interested in here is, this is the start of November on the daily chart here, where I had my little arrow here. That was the start of the US elections. And as it became quite clear that week that, Mr. Biden was likely to win and as said, there'll be a shift in global change. Well, actually, what we saw there was, we saw a kind of a move up there from, where we were around about 24,500. Well, you can see that there up until the sort of, the end of January, we shifted from 24,500 up to, just above 30,000. They're about 30,200 there. Okay, it's a reflection of a case, actually, of quite a wider range there. Namely that emerging markets are of interest. China is of interest. There is clearly quite a lot of business being done. There's clearly quite a lot of, US weakness, certainly in terms of dollar, and it's kind of a little bit of a reflection of a resurgence in sort of Asian markets, Asian economies themselves. We've come off a little bit there from at the moment, but what we'll be looking to see is, will price get back up to around about that 30,000 level? Okay, that would be of something of interest. So this is, as I said, this is a reflection of, of the kind of China, Hong Kong, Asia, emerging markets, dollar weakness. So it's something that you can actually add to your watch list and sort of take a look at and follow on the Admiral Markets platform. And what you could also do, and what you can also look at is, as I said, it kind of has an impact on commodities. And there's also a chart, kind of, sometimes you'll hear it called the CRB index, sort of a commodity. It's created by Thomson Reuters, but it's a CRB, okay? It's about a commodities index. In the same way that the dollar index, okay, looks at the dollar against the, as against the basket of the currencies, this commodities index is looking really at a basket of commodities, okay. And as I said, remember, that has a link to quite a lot of those emerging market economies. And what we can see here is effectively this is a weekly chart. So we all know we had that COVID crash there, okay. But hopefully you can see from March into April, we have seen effectively that sort of kind of move. We've come back. And actually what we've seen is, from about November time, all right, Mr. Biden's election, what we've seen is since then is that trend has continued, okay? It's demonstrating kind of, a bit of a weaker dollar, strength across those Asian economies, with a weaker dollar, commodities are looking cheaper. So invariably that makes it, more attractive for either economies wanting to buy commodities or those emerging market economies that are effectively looking to sell and export their range of commodities. So, all of this kind of, it comes together. We're giving I appreciate it's a little bit of a simplistic view, but the whole idea is today is to give you a flavor of it, to give you an understanding so that you can actually take away and look at it and start to sort of add this to your kind of like big picture review of what's going on in the world, not only now, but also in 2021 and beyond. So, you can see that that has moved there. So, as I said, that is the CRB index, and you can find that. You can have a look for that particular chart. You'll find that most investing platforms would have it there for you to able to sort of keep an eye on that, along with things like the dollar index, the dollar against the Chinese yuan, and also the EEM, the emerging markets index as well. And so, having looked at the commodity index, well, we look at a couple of particular commodities, and this is how you might be particularly interested to play it as either a trader or an investor. Here is gold. This is the monthly chart here. And what we saw is, remember, this is a monthly chart here. So, we were in quite a kind of a bit of a sort of an ascending triangle at the end of a downtrend here. And what we started to break out in sort of 2018. And then invariably what we saw was, the kind of price racing its way up there, okay, as we could see as part of that kind of, the sort of fear of COVID, and the effect that would have on economies. Well, that drove gold up to and above the $2,000 an ounce mark, okay, and it's come back considerably off there. It's now about trading around about the 1800 as we speak, okay, in that kind of 1800 level. But invariably, that was, it's an indication of interest. You can see that, there's buying of commodities. Okay, there's general, dis-ease of what had been going on in the US and in the West during COVID. There was kind of a little bit of nervousness regarding, the actual US elections and who would win of that. But what we're seeing is, people will still be keeping an eye on gold to give it a real interest and understand how that has an impact on, on overall commodities and overall the sort of major countries versus emerging market economy. So gold should also be part of your particular watch list. And with that, you'll see, this is platinum. This is from the Admiral Markets MT4 platform, which you can see here. And what we can see is that once again, this was a monthly chart, and we were in sort of a real quite long descending wedge there for a couple of years. We flashed out of it. We flashed down for it. We literally a great trade in terms of real sort of stop hunting. But what we can see was, we've actually literally continued to sort of move up with platinum. And now, we've seen certainly since the, the advent of Mr. Biden's presidency, platinum has continued to push up there. And now we're looking at, it's above $1,000 an ounce. And that would be my kind of line in the sand in that if we see that continue to hold above that for this year, that is actually pretty bullish and positive for platinum itself. And then, we can have a little look at silver, okay? And silver's kind of interesting because it's, this is a hot topics webinar. Silver's been a very hot topic over the last few days, but for different reasons. But hopefully what you can see is that, this is that monthly chart. And having been in a little bit of a descending triangle, we broke out of it, we pushed down again out of it, and then we sort of effectively rallied up there, okay, from what has really been a kind of a $14, all right, $14 line in the sand for silver. We saw price rally its way up, and at the end of last year, it sort of tickled the soft underbelly of $30, fell away, and actually this week we saw it come back up and once again tickle the soft underbelly of $30. But that was driven for particular reasons because of Reddit and social media traders, more so than the specific elements of looking at emerging market economies. However, what we'll see and what is of interest is, of course, silver is hugely important to industrial processes. Even companies like Tesla, who are, their share prices being, going gangbusters. Invariably, what you're looking at is they use a great deal of silver in their production, and so the likelihood is that as silver becomes more important, becomes harder to get hold of, certainly in its kind of physical quantities. All of that actually will help sort of keep the price of silver very buoyant. And so, for countries that that actually have the ability to pull silver out of the ground and export it, any of the emerging market economies, that will actually work well for them in the same way as platinum, gold, and a whole host of other commodities. So definitely, silver is of interest and one to watch at the moment, certainly with for a multitude of reasons, not just that its impact on emerging market economies. So in conclusion, ladies and gentlemen, the election of Mr. Biden signals a bit of a global shift from the Mr. Trump America First policies to focusing, going back on rest of the world and in particular emerging markets. And that has driven significant bullish moves for many emerging markets over the last few months. And hopefully you can sort of take that on board and see from what we looked at the charts there. It's important to understand the relevance of the US dollar in this conversation, this debate. If you're going to be looking at emerging markets and how they may play out, it's important for you to understand where and how the US dollar is playing out. You can actually sort of invest and engage with this whole idea of emerging markets either through certain ETFs, okay? And as I said, I think my colleague Jens did a couple of great webinars on ETFs themselves, and you'll find them on the Admiral Markets YouTube channel, but also you can engage with them through Admiral Markets through some of particular commodities plays. As I said, there are certain ETFs that will allow you to engage with those emerging market economies, but you always have to be aware of the risks involved and ensure that you make sure that you're doing proper risk management every single time. And that really doesn't matter, whatever you're trading, you'll find that is the theme that has underpinned certainly my own work here in the Trading Spotlight webinars is effectively making sure that you understand risk, manage risk in whatever ways that you engage with financial markets. So I hope you found that useful. If you're looking for more help and support, well, then you can find that on the exclusive Trading Spotlight community. I'll be there this afternoon to answer your questions about this webinar, but about trading in general. As always, you can join us there, tradersyard.com/group/312. You'll find my colleagues, Marcus and Jens. They place a great deal of stuff on there, and there's some great community there to help you along. And also, don't forget to join us next time. On Friday, my colleague Jens is going to teach you about how to trade earnings seasons, including what is earnings season, how to trade earnings season, a real trading example in Netflix, and Jens's game plan for the earning play trade. So that'll be on Friday, 5th of February, 2 o'clock London time. Check your inbox for the webinar link or head over to the Admiral Markets website to sign up. We hope we found that useful and interesting, has given you a little bit of insight, As always, the content is for information and educational purposes only, and you're responsible for your own trading and investing decisions. And if you wish to get in touch as well, of course, you have admiralmarkets.com website. You can also email us at global@admiralmarkets.com, on the YouTube channel, youtube.com/admiralmarkets, or facebook.com/admiralmarketsglobal. I hope you found that useful, ladies and gentlemen. As always, I wish you the best of success with your own trading and investing. And join my colleague Jens on Friday for his Trading Spotlight webinar, and I will be back a week on Friday for my next particular session. Trade well, and I'll speak to you soon. Thank you.